Okay, good morning, everyone. Looking at the US stock markets, the Dow has again recovered from the 24,000 psychological level. Since then, we did see a good consolidation breakout above the 24,500 points level, and the follow-through buying interest was noted on the Dow Jones Index as the Dow closed above the 25,000 psychological level on last Friday. The gains on the past couple of days was underpinned by the expectation or the optimism of the strong corporate earnings from Wall Street. Moving forward, we expect the Dow Jones to trend higher towards the 24,500 points. That will be the immediate resistance for now. Should the 24,500 points were to be breached, further upside will be seen towards the 25,800 points level. In the meantime, the 24,500 will serve as the immediate support for now. Okay, on the broader market, the S&P 500 was traded in a similar manner. We did see the S&P 500 has again recovered from the EMA 120, which is around the 2700 psychological level. Since then, we did see the good consolidation breakout above the 2750, and subsequently, the S&P 500 has closed just marginally higher above the 2800 psychological level. So for now, we need to monitor to see if there's any fall-through buy interest above the 2800. If should there be a breakout above the 2800, further upside will be seen towards the 2850 or even towards the previous all-time high of the 2870 points level. In the meantime, the 2750 will serve as the immediate support on the S&P 500 for now. Okay, some updates on the crude prices. The crude prices has again rallied from the low of 63 US per barrel mark. Since then, we did see a good healthy recovery on top of the EMA 120 towards the 75 US barrel level. After touching the 75 US per barrel level, we did see the head consolidation on the crude prices over the past 2 weeks. However, the recovery could not sustain, and subsequently the crude prices has pulled back just towards the 70 US per barrel level and traded on a sideways manner. So for now, we need to monitor to see how the crude prices holds above the 68. Should the 68 holds and the crude prices were to recover from this point onwards, we might see further upside on the crude prices back towards the 75. In the meantime, should the 68 level fails to hold, we might see further correction or further phase on the crude prices back towards the 63, towards the 64 US barrel level. Okay, some of this on our local front. The FMKLCI has again been trading lower towards the 1660 level. Since then, we did see the FMKLCI has revisited the 1660 level on 2 times. Subsequently, the key index managed to form the W-shaped formation breakout above the 1700 psychological level, and the follow-through buy interest was noted on last Friday as the FMKLCI rose and also closed above the EMA 20 level. Following the breakout above the EMA 20 level, we might see further upside on the FMKLCI trading towards the 1730. That will be the immediate resistance for now, followed by the 1760. In the meantime, the 1700 will serve as the immediate support on the FMKLCI. If you look at the weekly chart itself, the FMKLCI has again been trading lower for the past 4 consecutive trading weeks. However, on last week itself, we did see a good bullish engulfing candle on the weekly chart being formed on the FMKLCI. Subsequently, the MACD histogram has already turned green on the weekly chart. The RSI has also recovered from the oversold position. As you can see, every time the FMKLCI recovered from the oversold position, we did see the FMKLCI continues to trend higher from that point onwards. Once on the mid of 2016, another time on towards the end of last year. Since then, the FMKLCI rallied towards the all-time high level, and recently, once again, it has recovered from the oversold position on the weekly chart. So for now, we expect the FMKLCI to see a technical rebound towards the 1730 or even towards the 1760. On the FM small cap wise, we did see some of the positive sentiment was being established on the FBM small cap index. We did see the FBM small cap index has again recovered from the 13,600 points level on several occasions. And on last Thursday, we did see the bullish engulfing candle was being formed, while the follow-through buying interest was noted on last Friday as the FBM small cap index rose above the EMA 20 level. Following the breakout and a closing above the EMA 20 level, we did see the MACD indicator has really issued a buy signal, whereas the RSI is approaching the 50 level. So for now, over the short-term period, we expect some of the rotational play or some of the bargain hunting activities on the lower liners towards the 14,560 points level, while the stop loss will be located, or the support will be located towards the 13,500 points. But all in all, the indicators wise appears to be quite positive, as you can see that the MACD indicator has been slowly been trading higher on the FM small cap index. Before we move on to the stocks, let's look at the technology sector. Nasdaq has closed at the fresh all-time high level on last Friday. So let's look at the Malaysia's technology sector. The Malaysia's technology sector continues to inch higher. Earlier on, we did see the double-shaped formation of breakout. It subsequently staged a healthy pullback just towards the EMA 60 level, and this could be the potential continuation pattern as the technology index continues to creep higher, being supported above the EMA 9 level. So for now, we expect the technology index to trend towards the 37. Once the 37 level were to be cleared, further upside will be seen towards the 39 or 40 level. On indicators wise, we did see the MACD histogram has really issued a buy signal, whereas the RSI has also risen above the 50 level over the past 2 consecutive trading days. On stock wise, some of the technology stocks that we can watch out for, firstly, would be Pentamaster. Pentamaster has earlier traded towards the recent peak of 3.14 ringgit. Subsequently, it plunged towards the 1.69 ringgit. After hitting the 1.69 ringgit, we did not see any follow-through selling pressure, and instead, Penta has recovered and traded on a sideways manner. Recently, the uptrend in tech orientation formation was also re-established. The EMA 9, 20, 60, and 120 has been in line. And on Penta, we did see the price has experienced the consolidation breakout above the 247 cents level on last Friday, accompanied by some of the improvement in volumes. Following the breakout above the 247 cents, we could be seeing further upside for Penta towards the recent peak of 2.59 cents, or even towards the 2.76 cents level. Your stop loss point will be located below the 2.37 cents level on Penta. On MMFC, it's been trading on a similar manner. We did see a recovery on top of the 1 ringgit and 4 cents, 1 ringgit and 5 cents, 4 ringgit and 4 cents level. Since then, we did see price rejected the EMA 120 level on several occasions. And we did see MMFC has experienced the consolidation, short-term consolidation breakout above the 1 ringgit and 38 cents level, accompanied by some of the mild improvement in volumes. Following the breakout above the 1 ringgit and 38 cents, we could expect further upside for MMSP, firstly towards the 1 ringgit and 50 cents, towards the 1 ringgit and 60 cents level. The stop loss point will be located below the 1 ringgit and 28 cents on the MMSP. On JHM, price has experienced a heavy selling pressure towards the 70.5 cents level. Since then, we did see price has rejected the recovered, but it rejected the EMA 60 level and traded on a sideways manner. But on last Friday, we did see price has closed above the EMA 60 level, accompanied by some of the mild improvement in volumes. Following the breakout above the EMA 60 level, we could expect further upside for JHM. Firstly, towards the 1 ringgit and 13 cents, towards the 1 ringgit and 22 cents level. The stop loss point will be located below the 1 ringgit psychological level on JHM. On other stocks wise, we can watch out for will be IOI Property Group. IOI Property Group has earlier been trading lower towards the recent low of 1 ringgit and 47 cents level. After hitting the 1 ringgit and 47 cents level, we did see price has made a first wave of recovery. It rejected the EMA 120, subsequently pulled back, giving up most of its previous rally gains. And once again, we did see another wave of recovery as price closed above the EMA 120 level on last Friday. Following the breakout above the EMA 120 level, we did note that price has experienced a trendline breakout above the 169 cents level on IRA property group as well. Following this trendline breakout, we could expect further upside for IRA property group towards the 1 ringgit and 78 cents, or even towards the 1 ringgit and 90 cents level. The stop loss point will be located below the 1 ringgit and 61 cents, while the final defense will be located towards the 1 ringgit and 55 cents level on IRA property group. The last two company for today will be firstly is SKP Resources. SKP Resources is still on the downtrend phase, so any recovery from now will be just taken as a technical rebound. The good thing on SKP Resources is that we are seeing a lot of support along the 1 ringgit and 34 cents level, and recently we did see price has experienced this good gap up formation, subsequently pull back, and on last Friday, we did see price has once again closed above the EMA 20 level, accompanied by some of the improvement in volumes. So following the breakout above the EMA 20 level, we could monitor for the next breakout above the 1 ringgit and 48 cents. Should there be a follow-through buying interest above the 1 ringgit and 48 cents, further upside will be seen for SKP Resources towards the 163 or even towards the 1 ringgit and 75 cents level. The stop loss point will be located towards the 1 ringgit and 34 cents on SKP Resources. Last company for today will be Key Asset. Key Asset has earlier recovered from the low of around the 112 cents level. Since then, price has hit the recent resistance along the 20 cents. After touching the 20 cents, we did see Key Asset has experienced the short-term triangle formation breakout above the 18 cents level as price gap up on last Friday. Following the gap up and a breakout above the symmetrical triangle formation above the 18 cents, we could expect price to trend higher towards the immediate peak of around the 20 cents. Should there be a breakout above the 20 cents, further upside will be seen for Key Asset towards the 25 cents level. The stop loss point will be located towards the 16.5 cents level on Key Asset. If you have any questions, you can put in the chat box. I'll reply shortly. If there's no question for today, then we'll end the morning briefing. Thank you.